Nvidia Corporation, ticker symbol NVDA, is currently down to $118.58 a share, down about 10% from its yesterday's price. Reason for this is they have just released their earnings for fourth quarter and fiscal 2025. So despite these, as you can see, record quarterly revenue of $39.3 billion, up 12% from the prior quarter and up 78% from a year ago, the market has reacted poorly. Record revenue, 130, up 114%. Everything is up, yet the market says no. So what I'm going to be doing today is going through these and then taking it to my automated stock valuation spreadsheet, seeing if Nvidia is a buy or sell using the discount free cash flow model, comparable company model, dividend discount model, although Nvidia does not pay a dividend, and Ben Graham formula for intrinsic value. So let's just touch upon some of this. We'll look at the chart over the last, 5 years, up thousands of percent. But over the last year, you can see the stock has been relatively flat. Its all-time highs at about $153 a share and is down about 20% since that time. And obviously been decreasing recently and off their most recent earnings caused a big sell-off in the market. So just quickly going through this. Nvidia reported data for the fourth quarter ended January 2025, 39 billion, up 12%. For the quarter, GAAP earnings, diluted share 89 cents, up 14% and 82% from the prior year. Fiscal 2025 revenue, 130 billion, up 114%. Earnings per share, $2.94, up 147%. Everything is up, everything is up. If we just scroll down a little bit here, we've got the data set and the highlights. As said before, these numbers here, they've got the Stargate project, 500 billion. Cloud service providers, everything is looking good. Everything is up, everything is up. Gaming and PC, actually that is down slightly, but the full year is up about 11.4 billion. So everything is looking good. We have the revenue here, and let me just quickly scroll down. We'll see the breakdown a little bit further. Where is it? Oh no, sorry, it was here, my mistake. Yeah, so we have the revenue here, 24 and 25 for the 3 months ended, and then we have the full year. So increase from 22 to 39 billion, and as we saw before, doubled 61 billion to 130. Cost of revenue has doubled as well, but you can see here the gross profit up massively. We go down to the net income, 12.2 to 22 and 29.7 to just shy of 73 billion. So everything is up. So what we'll do is we'll go to my automated stock valuation spreadsheet. We'll put in the ticker Nvidia, and this will load up all the data, but we won't have the most recent data obviously because this is just hot off the press right now. It will be in here in a day or so, but we're going to do it. Oh, sorry, Nvidia do pay a dividend, 0.03%. A very safe dividend, as you can see, but we won't be talking about that. So if we look at the current quarter revenue, as I said before, it is 39,331, and you can see that hasn't changed the total revenue there. Net income, as I said before, was 22.091 billion, and then free cash flow, saw it a bit lower down for the quarter. It is 15.5 billion. So there you go, we've got these updated numbers. So let's take it to the revenue. Doubled, 130 billion as we said before. So revenues are at all-time highs. Net income, 72 billion, all-time highs again. Free cash flow, all-time highs, 60 billion. If we look at operating cash flow versus CapEx, this won't have the most recent one, but as we can see here, operating cash flow is jumping up massively and keeps going up. And CapEx has increased, yes, but relatively it is a very small increase compared to the operating cash flow. Shares outstanding, there's been some splits, but they are buying back their shares as well, which is very good for shareholders. So, discount free cash flow model. This is a way of valuing stocks, looking at their future free cash flows, discounting them today's value. And currently it's giving us a price of $63 a share. Let's see if we agree with these numbers. So in terms of revenue, we're at 130. We're expecting 170 and 200 billion over the coming years. Can they maintain this sustainable growth? Analysts are a little bit higher, 204 and 245 billion. So we'll be a little bit more bullish. That is a lot more bullish actually. Well, that's about 40%. Still $86 a share. Net income margins. The margins are growing. I mean, this is, yeah, going to be unsustainable. Free cash flow. We'll take an average of the, yeah, we'll bring this down a bit. That's about 80%. So if we had a much lower weighted average cost of capital, but Nvidia's is quite high. But basically it's putting it at $100 a share. Now these numbers are, is this growth sustainable? 40%? I don't think so. In the short term, maybe yes. As you can see, they've been growing about 50% the last 2 years. But, you know, is that going to grow up until 28, 29, 30? I would say probably not, but I've been wrong on Nvidia quite a bit. But the margins are crazy high. 50% is absolutely insane. So discount free cash flow doesn't hate the stock too much, which is quite crazy. Dividend discount model, we'll just skip past this entirely. You won't like it at all. Ben Graham formula for intrinsic value. Created by the godfather of value investing himself, Ben Graham. Let's see what analysts are saying in terms of growth. 50% in the current year and 26% in the next year. So we'll do the 26. $87 a share. If it was to grow at 50, it would be a buy. But once again, puts it about that $100 share price, which is very close to the discount free cash flow model. So not a buy, but previously this stock was not valued even close to these on these models. And now we are getting very close. So it just shows that maybe the market is right. Maybe they can, maybe they know what things are valued. So finally, let's have a look at the comparable company model. This is where valuing stocks looking at competitors. Now, Nvidia is a pretty hard one to compare it to, but we will try here. So we'll go for ticker AMD. We'll go with Intel, INTC, and we will go with QCOM, which is Qualcomm. If you're interested in this, please check out my Patreon, links are in the description. It's the $4 tier that gives you full access to the spreadsheet and all of the data as long as you are a Patreon member. So, unfortunately, Intel are not profitable, so we're not going to be able to look at that. But let's just see. In terms of revenue, Nvidia is the highest. Revenue growth rate, Nvidia is the highest. EBITDA highest, most profitable. Crazy margins, way higher than anyone. More so than QCOM, more so than AMD, definitely. Price to sales, 22. Market average is about 3, so way higher than the market average. Price to book, 40. Market average is 5, so way higher than these. PEG, quite interesting to see there, which is Peter Lynch's price to earnings growth. Ideally, you want this under 1. All of these companies, apart from QCOM, obviously, are under 1, and this is because of the earnings growth. So Nvidia, despite this quite high price, well, relatively, the second largest market cap in the United States, but still under 1. CV to revenue, it's the highest. EV to EBITDA, quite low. PE, low, and forward PE, quite low, but not a buy. So we're going to have to get rid of Intel, unfortunately, because they're not profitable. We'll go with, Broadcom as well. There's not really a massive direct competitor, Nvidia, at the minute. They're in sort of their own little space. But let's see what this does. We'll just let this load. So, because of Broadcom's very high PEs, Nvidia's of high, because of its lower PE, lower than AMD, lower than Broadcom, it is a buy. So if we were just to compare it against AMD directly, puts it anywhere between, well, EV to revenue, very high, but on the EBITDA and PE, puts it $122 a share, which is actually puts it about fairly valued. So all the models do have it at about fairly valued at the minute, which is quite crazy to see. So despite this crazy earnings, excellent earnings for Nvidia, the price has dropped down quite a bit. The market hasn't liked it, and I don't see how 100% growth is necessarily a bad thing. But yeah, things are a bit mad at the minute. The sentiment is quite negative in the market, but Nvidia's had crazy earnings and it's still managed to go down. Right, guys, thanks for watching. Please check out my Patreon if you're interested. Give a like on the video if you haven't already, and subscribe, and I'll catch you guys next time.